off. Americans return to space as Discovery clears the tower.
Welcome back, TTMTrades. So today, what we're gonna be talking about is we're just gonna be talking about this market rally, what I think about the SPY, and we're gonna look at some of the sectors, as we know that the S&P 500 is composed of 11 different sectors. Okay, so what we want to do is we want to look at these sectors on a short-term basis and get an idea of what stocks are rallying within those sectors, and kind of look at the setup. And then we're gonna look at those sectors on a more long-term basis, month-to-month basis, and just see how those sectors are performing overall. So that way, once you pinpoint how each sector is doing, then you can kind of pinpoint, what stocks to trade and what sectors to kind of play with. But for the most part, we're really going to talk about the SPY. In my last video, I said the SPY is going to drop down to about 195, maybe even 170, and I'm still sticking by that. All right. And the reason I say that is, yes, we have a stimulus bill coming out. Feds done threw everything they could throw at you: the kitchen sink, the table, the bathroom, the toilet. They didn't even threw the whole house at you. They done did everything they could possibly do, right? So now you got the gov doing a $2 trillion stimulus package, a lot of hype behind it. The market is rallying behind it, but there's still key areas that the market has to break through, that it has in the past now fallen through, right? Those lines of support have now become lines of resistance, right? And the stimulus package, great, hey, beautiful, but it still doesn't get to the underlying issue on why this whole ordeal even started, which is the COVID-19 virus, right? I said that I was going to be bearish on the market until they came out, until one or two things happened. Either they show that the numbers are starting to get curved due to us doing the social distancing thing, meaning that we've hit the peak of X amount of people with the coronavirus, and now that peak is starting to decline, right? If that happens, then that puts the market back in a good position to kind of price in all the damage and then start trying to do some base building, right? So either that needs to happen, and or two, they need to come out and say, hey, we found a cure and we're going to be dispatching it out, and now we know we have a permanent solution, right? And then again, that leaves investors and hedge funds to price in the damage based off quarterly earnings and everything, and so on and so forth. And now we can kind of price in the bottom, right? But I'm still bearish on the market, right? I think we're going to have a lot of short-term movements from this, what I call a sugar rush, right? A little bit of adrenaline sugar rush in the market, and then it's going to fade because reality is going to come back that COVID-19 is still an issue. The economy is still shut down. People are having to stay home, and money isn't circulating through the economy. Granted, the Feds is doing quantitative ease and so on and so forth, right? So we're just gonna jump right into it, and let's look at some of the market sectors. All right. So we're gonna go over here, scroll down, and we'll do a sector summary. So we'll do a 1 week sector summary. So as you can see here, the energy sector has really rebounded. It's taken a beating due to the oil. There was already issues with the oil market prior to the price war starting between Saudi Arabia and Russia. That really hurt the energy sector. So as you can see here, it rebounded along with consumer discretionary, industrial, so on and so forth, right? So if we just go to the energy sector, let's see what really rebounded strong. You can see a lot of them: pipelines, oil and equipment, so on and so forth. So we'll open up pipelines, see what stocks in are really rallying. This one had an 81% jump. PAGP, so on and so forth. Let's look at some more bigger name stocks with more value. Phillips, OGE. So let's just kind of look at some of these setups. Huge rally on this one, right? But it's still in a very bearish setup. Let's look at some more common name ones, like Phillips 66. Nice little rally, but still in a very bearish setup, as it is below its middle BB and its 150 SMA. So overall, I don't want to start digging too deep into the charts, okay? The energy sector has had a nice rebound overall, as you can see, in the consumer staples and utility sector, along with the real estate sector, hasn't really bounced over the course of this last week, just based off the stimulus package news, okay? Now, if we go to a more long-term view, all right, if we go out to 3 months, you can see that each sector is still battered pretty bad. Even though the energy sector had a large rebound, as we just showed you, the energy sector is still the worst sector performing. Okay, the one sector that has been holding on pretty strong, as you can see here, is the technology sector. Right, it's been holding on pretty tough and hasn't really been following the overall trend of the market too much, and losing a lot of its weight. So if we zoom in, kind of look at this, let's look at some of these setups. See, a lot of these markets are still having, a lot of these sectors and stocks are having these rallies, but they're still in very bearish setups. Okay, and a lot of work still has to be done to bring them out of these downtrends, right? You still have to, double test that bottom, do some base build and consolidate, and then come out of that trend. Even if we drop down to 1 month, you can still see energy sector still doing the worst, and the technology sector still holding up pretty well, along with the healthcare sector and the consumer staples sector. But that's just a quick overview of some of the sectors. All right, now what we really want to talk about is the SPY. Okay, I said that I see the SPY dropping down to 195 and 170, and the reason I said that is because this is the monthly chart as we look at it, right? A reason I said 170 is because that's right where the 150 SMA for the monthly chart is sitting at, right? And give or take, as months tick on, it's probably going to tick up to about 170. So I'm calling 170, and I said 190 because that's where the last resistance was at, last area of major consolidation. Okay, so as you can see here, back in 2015, the entire year it consolidated between 170 all the way up to about 195 in this range for an entire year, before finally breaking out in 2016 and making this run to the upside right around the time that President Donald Trump got elected. Okay, now, hence the reason I say we're going to drop back down to that area. Now, with that being said, the monthly chart is still set up not bearish, but you can see that the overall trend has broken down. Okay, and the reason I say that, let's pull this up here. Again, I'm gonna point this out again. Ever since we came out the financial crisis, as you can see here, back in 2009, when the market crashed back in 2008, as you can see here, dropping all the way from 121 down to $53 as a low, right? Ever since we had that rally coming out of that recession, okay, you can see here that, again, that middle Bollinger Band has held pretty well on the rally every single time as it made its rally, right? So 1, 2, pull back for some consolidation, 3, another pullback, 4, and now we've broken through that middle Bollinger Band. Okay, now as a double Bollinger Band strategy, which is what I use to trade, right? Anytime a stock is in a strong uptrend, I say this in a lot of my videos. So for those of you who've been following me for some time now, I apologize if I'm repeating myself over and over, but any stock that is in a strong uptrend will hold between its top 2 Bollinger Bands, the 1 standard and the 2 standard deviation Bollinger Bands. It will consistently hold between the 2 bands and continue to trend upward. Anytime that stock needs to pull back and consolidate, it will find support on that middle Bollinger Band, which for me is the 30 SMA, and then continue making its run up. When it needs to consolidate, pull back, find support, do some consolidation, and then make its next leg up. So what we have here is when the stock pulled back, the SPY, it immediately broke through that middle BB, all right, which takes the whole trend, it takes it to a halt right there. So now this uptrend that's been going on since early 2009 all the way to 2020, this 11-year bull run, it comes into a question on a long-term basis. Okay, now granted, the month of March hasn't ended yet. We still have this week and then a little into next week, Monday and Tuesday, to trade into the month of March, right? So again, this could rally all the way up to 274, right where the middle Bollinger Band is sitting at, and it could close right above it. Right now, if the market rallies to 274, give or take, over the next couple 1, 2, 4 trading days and closes above that 274 to 275 range, then I would probably start, switching from a bearish sentiment and not even into a bullish sentiment. I would probably get neutral at that point and kind of question what the market is trying to do, if it's trying to re-rally on a month-to-month basis and continue this uptrend. Okay. And that's if it pulls above 274, closes above it, and then holds the entire month of April, showing that that line of support is holding. Do I think that's going to happen? No, I highly doubt that we pull above that 274. Okay. I honestly think we have a lot more to drop from the high of 337 all the way down to the low of that. What was the low of the month? The low of the month was 218. So from the high of 337 to the low of 218, that was already a 35% drop from the peak all the way down to the bottom before we had this slight rally right here, as you can see here. But I still think we have more to go. All right. I honestly think we still have about another 20 to 30% to drop. Right. And that'll bring us back down to that 170 to 195 range. All right. We've already violated the middle Bollinger Band, and I highly doubt the market's going to rally to close above it on a month-to-month basis. All right. I've already been saying in the Discord chat room is to watch 253, that 250 to 255 area, right? That's an important area because if we get it back above that 255, then that takes the monthly chart out of a possible downtrend, and now it could just be consolidating in that area of 250 to 255. As you see, the bottom one standard deviation Bollinger Band is right there. Okay. But again, if we pull below that bottom one standard deviation Bollinger Band and then close in this area, then that sets up the chart for next month to open in this area in the month of April and then continue another leg down, breaking outside of the bands. Okay. Which will set us up for that 195 to 170 push. All right. But we have to continue to watch, right? We still have more time in the month of March. And this is more on a long-term basis. If we look at the weekly setup is in a very strong downtrend. One is broken all the way outside of the bands, as you can see here, is below its 2 standard deviation Bollinger Band, which shows that the rate of speed or momentum in which the SPY drop was at a very fast rate. Okay, and now we're getting a small rally here. All right, and then again that 250 to 255 area is very important because as you can see here, that 256 is sitting right there on the 2 standard deviation Bollinger Band, okay, for the weekly chart. All right. Again, if we can get above that 256 and then possibly get back up here to that 280 range, that'll take the weekly chart out of its downtrend. But I highly doubt we rally that high again up to that 275, as we see here on the middle BB, to that 280, as you can see here on the weekly, right? That's a pretty big rally, so I highly doubt we get back to those ranges anytime soon. But as you can see here, the weekly chart was oversold and it did need to get a bounce. So this is a bounce that we were kind of expecting. Even on the daily chart, again, that 250, which is the bottom one standard deviation Bollinger Band here, is sitting there, right? If we break above that 251 standard deviation Bollinger Band on the daily chart again and rally and hold, then that takes the daily chart out of a downtrend. All right. If we rally back to that 288 middle BB on the daily chart, right, which give us some time to continue to tick down and match that 280, which is what we saw on the weekly chart, then what that does is that takes the daily completely out of a downtrend setup, and then it sets it up into a consolidation period to try to break out and make it back to the upside. But again, that's going to take a lot to get the daily chart out of this downtrend setup. All right. So what do we have here? We do have a temporary bottom established on a day-to-day basis. Just like back in early March, when we hit that 283 range, we correlated to this consolidation range back here, and we got a nice little bounce, and then we rallied into the 1 standard deviation Bollinger Band to try to pull the daily chart out of a downtrend setup. We immediately felt that area and then continued this downtrend. All right. Overextended, we started to get another rally again. We hit that 1 standard deviation Bollinger Band, and now we're having trouble getting above it. So this is a key level to watch, that 250 to 255 range, because again, that'll take the daily chart out of its daily downtrend that it is currently in right now. All right. So just looking at it on a long-term basis, the monthly chart is already breaking down. Okay, I'm still very bearish on this. And just on the weekly chart, still in a strong downtrend. A daily chart, still in a strong downtrend. Now, when we get to the more intraday charts, the 2-hour, 30-minute, and 5-minute, these charts are, well, mainly the 30-minute and 5-minute chart is set up very, very bullish. So you can see the intraday momentum, but again, that momentum has to hold for a very long time, because that momentum has to bleed into the 2-hour chart, which has to bleed into the daily, which has to bleed into the weekly, to get all these charts set back up to possibly make a strong reversal and try to head back to the upside, right? It's going to take a lot of work. So the 2-hour chart, which we've been watching here ever since the breakdown back on the 21st, 24th of February, has been in a strong downtrend, and it has not been able to close and hold above its middle BB. So as you can see here, constantly pushing, strong rally, broke above that middle Bollinger Band, and then completely failed. Each attempt above its 1 standard deviation to get out of the downtrend, it failed. Attempt here failed, next leg down. Attempt here failed, next leg down. Again, failed, next leg down. Failed, next leg down. And now we get the strong gap up and then a run up as far as the stimulus bill being passed here. All right. So the 2-hour chart has a decent setup. It does, as far as some short-term momentum to the upside here. All right. But as you see, we push into that 2 standard deviation Bollinger Band, and then immediately we got rejected, and now we're pulling back, which shows that the 2-hour chart is consolidating. Now, what would make me a believer that we're going to switch gears as far on a day-to-day basis, because again, I use the 2-hour chart as a precursor to what's going to happen on a day-to-day basis. And the 2-hour setup, it's a nice setup, right? But it still has a lot of leg work and consolidating it needs to do before it tries to take itself out of a strong downtrend into uptrend. Okay. But if the 2-hour chart, which I expect tomorrow for it to pull back, if it pulls back to that 238, which is his middle Bollinger Band, and/or is 230 and it holds, then that lets me know that we're possibly setting up for another leg to the upside on the 2-hour chart. All right, which would be very key to test that 280 to 288 range right here, where the daily middle Bollinger Band is sitting at. Okay, so I'm looking at a pullback tomorrow, and what this does is it gives me a W pattern that I like to trade. All right, and the W pattern that I use to trade on the double Bollinger Band, it goes like this. All right, because I thought we had a W pattern back in early March, but then the pattern broke down. All right, W pattern, normally when a stock is in a strong downtrend, it'll continuously stay below its bottom 2 Bollinger Bands, and as it continuously pushes, it'll finally hit a bottom, break out to the upside to attempt that middle BB, and then when it pulls back, it'll find support either on that 1 standard deviation or a pullback for a double bottom, but it'll stay within its bands. Okay, now by doing that, what that does is it showed that the price action pulled back to test its double bottom, but it stayed within the bands, meaning that that downward momentum has slowed. So what you get is a W pattern like this: first leg down, a rally to attempt that middle BB, a pullback that'll hold within the bands, and then another run up, which will give you a W pattern as such, like this. Okay, but you can see this W pattern failed back in early March, because you got the rundown when it pulled back like this to make its W pattern. That final leg failed and it continued downward. All right, so we could possibly be looking at a W pattern right here. As you can see, you got the first leg down, coming all the way down. You get the rally to the middle BB, and it actually breaks above it, expecting a pullback here to that 238, even possibly down to 230. Right, what we want to see is that when it pulls back, it stays within the band. So that bottom 2 standard band is sitting at 222, and then you have the 1 standard sitting at 230. So we got 3 levels of support we can play with here. All right, we got 238 middle BB, 230 1 standard deviation, and 222 2 standard deviation, right, which are all lines of support that support prior points in which the 2-hour chart showed as major areas of consolidation, right? If I mark 222, this is the bottom right here in this area where the chart dropped. If I mark 230, it shows this bottom where the price action hit and then felt that leg. If I mark 238, it shows this bottom right here where the price action tried to rally and then fell. All right. If I mark 246, it marks this bottom where the price action dipped on the 2-hour chart, tried to rally and fell, right? And then if I mark the 255, again, it shows this area of resistance, right? So this is why I love the double Bollinger Bands, because it marks all these areas for you. So instead of me having 1, 2, 3, 4, 5 different lines on my chart, which I hate a million lines on my chart, the Bollinger Bands do it for you automatically, right? So these are the areas of support we're looking at on this pullback going into tomorrow, right? Unless some great news come out tonight and the futures rally and we continue this uptrend, all right? But we're looking at 238, 230, and 222. All right. Again, 3 levels of support. If we pull back and we, worst case, pull all the way back to 222 and hold above it, and then we start to rally, then that creates the W pattern, right? First leg down, second leg up, third leg down, it holds in that 222 for a double bottom, and then rallies back up to create a W pattern. And then we will attempt the 150 SMA, which is currently sitting at 296, but will adjust as the days continue to go on and the data feeds into the average, okay? Again, if we pull and we fail all 3 areas of support, then we go back into a downtrend and this W pattern again fails as it did in early March, okay? But we are going to have a short-term pullback here. So looking at the 30-minute chart, you can see the 30-minute chart, which has been in a strong downtrend this entire time, unable to get above its 150 SMA, which is what we've been tracking. Has finally broke out and got above the 150 SMA, but now it's beginning to pull back. All right, you can see it was oversold here in the 30-minute chart. We're getting a nice pullback here. As you can see, it fell below both its averages, short-term and a long-term average on the RSI. And the 30-minute chart is still in a great setup. All right. This is why I think we may get a temporary pullback tomorrow and possibly try to attempt another leg, but we'll see. I don't want to call that too soon. Okay, but the 30-minute chart is above its 150 SMA. All right. It is in a bullish setup, seeing that it has created a higher high, as you can see here. You got a high here, lower high, lower high, lower high, lower high, and then you get a breakout to create a higher high. So when you get that pullback, like we was talking about on the 2-hour chart here, what you want to see is that it holds above that 222 level and it doesn't create a lower low. Okay, if you get a higher high with a pullback with a higher low, and then another rally back to the upside to create a higher high, then again that fulfills the W pattern that we're seeing here on the 2-hour chart. All right, so the short term, in the short term things, in the short term technical setup, the SPY is in a good setup. Okay, but again, those are the key levels we want to watch on the 30-minute chart as we go into a pullback tomorrow. As you can see here, the 5-minute chart is already pulling back. It's still in positive territory here above the 0 line. Fell outside its bands on this consolidation, and you get this fast breakout. Hence, right here we can see the consolidation as the Bollinger Band width was below its average, and now we're getting the breakout to the downside, as you can see here. So again, those key level supports we want to watch again is right in that 244 area. As you can see, the middle BB is kind of adjusting to come up to that area, and then that 231 sitting right here on the 30-minute chart, right? So again, we're going to pull back to that 244, 243 area. If the price action catches and hold, then again, you'll get that run up. If not, then we'll pull all the way back and test those key areas we're talking about on the 2-hour chart. And we do have a gap right here that could possibly get filled. So we'll see. All right. I did take puts that expire tomorrow on this one. So I plan on closing those out first thing in the morning as this pulls back down. And then again, if we get that, if we hit those key areas of support and they catch and we start to see intraday charts adjust and turn bullish based off hitting those support areas, then I'll switch my position to calls. Okay. But we're playing very short term, risky, expiring 2-day calls and puts on this swing here. Okay. Because I believe the overall trend is still bearish. All right. I'm actually holding puts right now on the SPY. that are probably down, give or take 40% right now. Small position size, but I'm holding puts on the spot because that's more of a long-term trade. All right, I'm trading more of the month-to-month basis charts on these, and the expiration date isn't out. The expiration date is until June. All right, so we have plenty of time on those for those to develop and get in the money and actually make some money on those based off the longer term trend we see on a month-to-month basis. But on a short-term basis, right, we're trading calls and puts that expire that week because we're in and out making quick change, and the objective is to make a couple thousand, and that way when the market begins to reverse and start its next leg down, if it starts its next leg down, but based off what I'm seeing on the setup, this week to week setup is horrible, right? You would literally have the week to week would have to get first, the daily would have to get above this 250 area, hold, consolidate, and then break out to the upside to get above the 280 area, which is what we're seeing here, to take the weekly chart out of its downtrend, consolidate in this 280 area, and then get back above his middle BB to continue his uptrend. Okay, and that's going to take a lot. It's going to take a couple months for this SPY setup to get back where it needs to be on a week-to-week basis. And I highly doubt it gets back there because we haven't fixed the underlying root issue, which is the virus itself. Okay, so long term, we're going to 195 to 170. This is why I see this is a major area of support that the market should catch. If we don't catch that area, then it's going to get ugly from there. All right. But in the long term, I'm still bearish. In the short term, from a 5-minute, 30-minute, and a possible 2-hour setup, I do see us having a short-term rally here to some key areas of resistance to test those areas to see if we can hold above those areas. If we do test those areas of resistance and break above them and hold, then my sentiment as far as being bearish will change and go into a more of a neutral state until we can start seeing those key areas of resistance now become support and hold before we test the next area of resistance. Okay, but right now in the short term, the SPY is very bullish, so please play these short-term rallies to your strength. These up and down movements, take small position sizes. I use my 10 for 10 rule. I trade with 10% of my account with a 10% stop loss. So when that 10% stop loss gets hit, it's a total for a 1% hit on my total account. All right, that's my 10 for 10 rule. And we're going to use that to trade these short-term swings, and we'll keep the other 50% of the account in the long-term setup as far as puts and trading a long-term trend. Okay, but again, TTM trades, that's my analysis of the S&P 500 or the SPY. Make some money on these short-term rallies, trade with a small position size, and you gain to make more with shorter expiration dates. All right, but if you buy at the wrong time and the trend goes against you, then you risk the chance of your options expiring on you within a day or two or within a week. So unless you have a great trade setup that you know works for you and executes 99.9% of the time with a stop loss on it, then I would probably play your expiration dates a little further out, or just stay cash until you get a clear direction on which way the market is going to continue to go. Okay, but I highly doubt we get a V-shaped breakout on the SPY where we run down like this and then just have this strong bull run back to the upside and then set up to get back into an 11-year bull run that we was previously in. I think that bull run is over and the market is going to pull back and discount itself before big investors and hedge funds comes back in and start buying. And that's what we're going to follow, right? We're going to follow the money, all right? Supply and demand. Supply is what pushes the market down, and demand is what pushes the market up. And right now I'm seeing more supply in the long-term aspect than I am seeing demand. So that's what we're going to follow, all right? TTM Trades, so next time you got questions, the Discord is down below. Leave a comment, hit the thumbs up button. That helps the video circulate more and more people see it and support the channel. But till next time, I'm out. Trade safe, small position sizes, all right, and do not blow up your account. All right, almost blew up my small account 2 times, but we'll talk about that towards the end of the month. All right, till next time, I'm out.
Listen, Tranquility Base here. The Eagle has landed.